makers, I believe you're going to do this. Nothing's going to stop you. Never lose heart. Stick to this, and you're going to go so far. You're going to go way beyond what you thought. I struggled for the next 5 years, and I would hit and miss. I'd have periods of winning, and then I would blow the account. And I'd find another approach. It would be winning, and then blow out. It wasn't until I started applying the things that I learned by meeting these quote-unquote market makers and floor traders. I looked at the idea of liquidity, how things are really driven and how price is delivered in all asset classes. That changed everything. So, and the short answer is it took me 6 years to find consistency in what I'm doing, feel comfortable knowing what I am looking for, not deviating, not being interested in chasing another pattern or another teacher. There's always been new books coming out, always some new hot hand that comes out. Some guy won a contest, some guy wrote a book, some guy's teaching something on YouTube. It's always cropping up. That's always happening. I was never interested in chasing anything after that. That 6-year mark, something changed inside of me. I just didn't feel the need to change what I had already found, and I stuck with it. I learned how to use compound interest effectively, but not over leveraging, and I used a very low-hanging fruit approach. I wanted to get 50 points a week. It eventually grew to 75. Once I got it, I stopped. I didn't compare myself with everyone else. I didn't compare, am I doing this market when I shouldn't be doing another market because this guy just made so much money. I didn't care what everyone else was doing. I just focused on what I was doing, and the bottom line reflected it. But I was in a rush to get out of my job, and I tried to do as much as I could, as fast as I could, and it was a mess. You know, like everyone else, I was not exempt from the humble beginnings and the crash and burns. Controlling themselves, the impulse to want to be doing something. That's the biggest barrier for everyone finding consistency, because everyone, given enough time, they'll find wins. The problem is we fall in love with that moment where we've done something correct in our mind. It gave us a reward. There was money you deposited in the account. The first thing we want to do is go on social media, share it with everyone, and it's that moment that you need to stop. Don't do those things. Don't chase the outward acceptance. They should be focusing on developing a rule-based process that limits the amount of time that they do this and the frequency in which they do it. Now, I'm not stating that they can't eventually develop a scalper's mentality and take 4 or 5 trades intraday. I used to do that too. But I've learned that if they, like I've done myself, if you learn to control yourself and discipline yourself, what would be the ideal scenario for you as a trader? Because everyone wants to get in here and trade and leave their job, but they don't really weigh it out, because what you're saying is, I don't want to go to work for that guy. I want to go to work for myself. But you don't know yourself. Most people that get into this, they don't really understand themselves. They don't know how they're going to react when they're making a lot of money. They don't know how they're going to react when they blow their account, or they have a series of 6, 7, 8 losses in a row. They don't know what they're going to do. So you know what you're getting with your boss. You know who he is, she is. You know what he's going to ask of you. Okay, so stay in that environment until you know exactly what you're doing. If you master yourself first, understand what your reactions are going to be. Do you go to the marketplace, turn on your charts, and put a trade on when you just got into a heated debate, or you're angry, you're in trouble about something, your kids aren't listening, they're not doing well in school, you haven't been feeling well, you just got in a relationship spat with your spouse. Those are prime opportunities for you to self-destruct. And you need to target with a journal, write down these trigger events. Because I can tell you, I've been journaling since I was 16. And I have journals all the way back to when I was 16. And I can tell you everything about my life, every single day of my life. I've done this since then. And I can also tell you what led up to me making the biggest mistakes throughout my entire life. It was always these types of things. We cannot take these moments out of our lives where we're uncomfortable, we're having anxiety, we're fearful, we're impatient. It doesn't work like lottery. You think that, well, I'm going to sit down in front of the charts and I'm going to plunk in some money and I'm going to get a trade and I'm going to feel better about myself. Because even if you do win, even if you do, what that's going to do is it's going to reward toxic thinking. Because now what you've established subconsciously is that you've assumed, because you're uncomfortable in the real world, you're going into the trading world. That's your escape. That's your fairy tale land. That's your dreamland. Okay, you're eventually going to take that and bring it into reality, and you're going to leave work. You're going to drive fancy cars. You're going to go to exotic places. You're going to eat in fine restaurants. You're never going to worry about the price tags. That's what you're all thinking about when you get into trading. Whether you want to admit it or not, that's really what this is all about, because you're here to make money. But you're never going to make that money if you go into your life and say, okay, I'm replacing this negative feeling I'm having right now, and I'm going to replace it with a trade, because you don't know enough about yourself. You need to know all these little trigger moments. This is the reason why I teach with a demo account, because people will self-destruct. Given enough time, everyone does it. Everyone. There's never been a person that's ever sat down and said, I'm going to start trading, I'm going to use a live account, and he never blew out account. It's never happened. They always do it. Okay, so no one talks about this in books enough because it wouldn't sell. Who owns the currency? The central bank. The real message is, don't do these problematic things. Don't self-destruct. Don't take these real life adversities and try to replace them with a winning trade. Every time someone does that, it's always the wrong thing, because obviously most of the time you're going to lose money. Then how are you going to feel? You're not going to be happy. You're going to be miserable. And it's just going to compound over and over and over again. So I would suggest that folks would spend time, the next 30 days, evaluate themselves, ask themselves the hard questions. Why do they want to do this? And then when they trade, we hear about it a lot. Traders that talk about journaling. They'll say, write down how you felt before the trade. What does that mean? What does that mean when how I felt excited? I felt like I'm going to make some money. That's what everybody's thinking. But no, what you need to be doing is asking yourself, honestly, cut right to the core. What am I trying to get out of this transaction? Because I'm upset. I'm working really hard for the person I'm working for right now. I'm not getting enough money. They're giving me very little money for the time I'm investing. I'm separated from my family. I hate where I'm at. I just need a change, and I need this to happen. I need it to start right now. That's the real reason why you got in that trade. And you need to write that stuff down in your journal. And you'll see, if you spend the next 30 days doing that and focus more on the processes that you should be replacing that with, you'll do that far less. And then you'll go into looking at setups more objectively. You won't have the emotional stimuli behind those transactions. You'll say to yourself, this is a setup. This is what it should do, and I don't care about the result. This is what the process suggests I should do. I'm going to do it. That's the only way objective consistency is achieved. Trade setups. The first thing we learn in retail is the concept of support and resistance, where there's a double top, a double bottom, a triple top, triple bottom, things of that nature. That's like my favorite go-to scenario, because if I can determine that the market is poised to go higher, and there's a double high or a triple high on any time frame, it doesn't work just in certain time frames, it's all time frames. If you take these scenarios, okay, and you pair them up with a analysis for the weekly range, if you think the weekly range is bullish, okay, great. Now I like to go in the chart and I look for areas where on the 4 hour, is there a double high about 150 to 200 pips away, or even 50 pips away? And that would frame my week. If I don't have that, I don't look at it. I go to the next setup, or I go next to the next pair. In my case, it's just euro or cable. If neither of those pairs have it, then I'm sitting still doing nothing. Now, what the pattern is, and what I'm annotating on my chart is, I know there's liquidity above those equal highs. What's going to be residing above those equal highs? It's going to be buy-side liquidity. Someone shorted the market up there. I don't care to know who it is. I just know there's liquidity up there. Like I mentioned earlier in our discussion, the markets move because of liquidity and for the money. Well, the money isn't in between the moves beginning and ending. We are told that's where the money is. No, the money is before the move starts, because it's attacking some measure of sell side liquidity, or what we know as sell stops, runs below an old low, gathers those orders up, and they pair. Those sell stops, when the market trades down there, it triggers this sell side liquidity as a rush of willing participants that are only interested in doing what at the time? Selling. That's what their orders are doing. Smart money, they go in and then use that to pair up their buys. What I do is I do the same thing with that. I want to be buying below an old low and targeting a run above equal highs. It could be a double high or a triple high. It has to have an opportunity for me to make 50 pips or more. If it doesn't, I'm not interested. And I just keep track every single day. I'm looking for these scenarios. If I could go back in time, I get this question a lot in email and folks on Twitter. What would I do differently? Knowing that if I was working, how would I approach it and do it differently? I wouldn't have tried to trade as many markets as I was trying to do then. I would have just settled in on one and focused on short-term trading. Not position trading, because you're not going to stick with that. Nobody has the understanding or the patience to do that. Regardless if that's in your nature, you just aren't going to be that inspired or interested. Short-term trading, I think, is ideal because it allows you a lot of stimuli. It gives you a lot of opportunities. Every single week there's an opportunity to be focusing on and studying. And I think that if your listeners are contemplating getting into trading, or they've been trading and haven't found any continuity or consistency yet, my suggestion is to do this. Pick an asset class. It doesn't make a difference if it's crypto. It doesn't make a difference if it's stocks or futures or Forex. It doesn't make a difference. Pick one asset class and one market in that asset class. Study it. Learn it very, very well. Learn all of its intricacies or its characteristics. That things that it does, okay, those characteristics, you will pick that up if you study for 6 months and you're detailed about what it is it's doing every single day. Print out charts, make your annotations, make things on the chart that resonate with you. You know, patterns that you see repeating over and over again. Certain times of the day, certain things take place. Highs of the lows, when do they form? For the week, for the entire daily range. When are the highs and lows forming? Focus there. And I think in very short time, you'll see that there's a lot of opportunity that won't require you a lot of babysitting, because everyone has the responsibility to take care of their family, themselves, please their boss. They have to be gainfully employed until they can earn their money through speculation, if that's their goal. Focusing on going slow is my best advice to someone that's getting into this or contemplating getting into it, and trying not to do things fast. Like I mentioned, my goal was 20 years later. That was the finish line for me. When I was 20, I wanted to retire at 40. So I had went into this with that mindset, but it wasn't until me getting into trading and seeing how fast money can come into the account, then I lost my mind because I had no discipline. So you have to develop those rules and parameters early on and don't deviate from them. Don't be on your phone doing multiple trades at work, and don't try to replace the normal stresses of being at work, being separated from your family, not having enough money. Don't take those things and use them as catalysts to get into a market, because you want that feel-good moment. You want to be distracted, because if this trade works out and makes me money, I'll feel better about my situation because I'll be moving out of it because of that. It never works that way. It never, never, never works that way. Focus on developing yourself, learn more about who you are as a trader, how you think, and then operate in a short-term realm. If you do that, I guarantee you will see development and progress that you wouldn't have otherwise done. I believe you're going to do this. Nothing's going to stop you. Never lose heart. Stick to this, and you're going to go so far. You're going to go way beyond what you thought.